All right, everyone. Welcome back to the Capital Mindset Show. We are live. So this is going to be, I guess, part two because this is a returning guest and a subscriber. So, and let us begin. I'm going to let you take it away.
Question: should I sell my house before? Which I should I sold it before we started this or after? Because I know you're charging me, what was it, like 40K a minute?
Yeah, $40,000 per minute, or no, per second.
This is the biggest investment I ever made. I'm either gonna get super rich or truck stop, one of the two.
Or what's the interest rate on top of that you're paying?
Interest rate minimum 200%, minimum,
200% minimum, 200%
minimum,
interest rate.
and that's
Yeah.
what, half a second.
Half a second, compounded by each half a second. All
Yeah.
right, so beginning on all serious note, that was a joke if anyone couldn't tell. So what are some of the? I'll let you take it away. Actually, you go.
All right. So, big fan of the show. I definitely do appreciate all you do for us, Fabio. Um, throughout the days, I've been curious. I've been watching so many videos, been curious about some stuff. I wrote some notes down, some questions. Maybe the community. The good thing about this community, I feel, is that we don't want fishes. We want to learn how to fish. So I thought, just make some questions up over here that I have written down. Maybe you can answer them in a little more detail. Usually, all this kind of stuff you have said it, just not to a very specific kind of degree.
Mhm.
So, first question: you talked about the liquidity crunch, right? What can you go a little bit more about what is the liquidity crunch and what kind of gave you some signs of the liquidity crunch?
Yeah. So on a big note, because you're probably also referencing from the call we had yesterday in the Discord, right?
Yeah, yeah.
So the uh, the liquidity crunch as a whole, it's more like all encompassing in a lot of ways. So in traditional sense, we can talk about like the capital markets and its effects on the capital markets. And of course, you pause me at any point and you say, okay, explain that further or go a little bit deeper into that, and we'll do that. So, but all in all, I kind of was talking about it in the context of capital mindset, with talking about how it was affecting my personal strategy with what type of assets I was looking to acquire and the aggression at which I was attempting to do so. It wasn't in a sense that said I should either stop buying assets altogether, sell all my assets altogether. That would be, what separates timing the market versus kind of just strategic shifts. All right, very different, the two. I think that timing the market is when you say, okay, this is going to happen. I'm going to quite literally remove myself entirely from that asset class
Mhm.
or assets as a whole, and then I'm going to repurchase all those assets at a later point in time at a cheaper
Mhm.
price. That's more of a bet, right? Now, the liquidity crunch, going back to that, it is kind of all encompassing. With regards to the capital markets, it had to do with just basically my identification of the velocity of leverage, right? Leverage was basically rising at a rate that was quite interesting. What we discussed yesterday was also in some detail, won't give every minute detail, just more repeating without what I said to you yesterday. But like when we looked at Archegos Capital, right, when that blew up, that kind of gave us an insight as to there was probably more leverage in the system than what people were even aware of, right? Because that was a big surprise to everyone. That just happened, boom, all of a sudden. So the other kind of issues, right, that I kind of was looking at was the bond market. The bond market had a little bit of jitters in February and then a bigger one in October. October, we also saw when the Federal Reserve was kind of overtly saying, and that was in October. Everyone can kind of remember that. October, the Federal Reserve was coming out and saying, we are going to do this at this time frame. And even if you are, quote unquote, Snyder pilled or not, you can at least appreciate, and I'm repeating exactly the vernacular I said yesterday, right? Exactly how I said
Mhm.
it.
Mhm.
But if you're Snyder pilled, you can at least appreciate the psychological impacts it would have on markets, right? Specifically capital markets, and how on a rising rate basis, if rates were to rise, coupled with all those factors we just mentioned, right, that would have a constricting effect in a variety of key places. And I talked about, for example, with REITs. REITs were one that a lot of them you can kind of map out almost precisely to the T in January, back when I made that video in January. I don't know if you saw it, Trucko. Did you see that video? You did? Okay. So back when I made that video in January about REITs, I said that I don't have any REITs anymore. I did a strategic shift where I believe they would be one of the most affected by the liquidity crunch. And I also didn't have any banks, right? Because traditionally retail investors think that rising rates means banks make more money, because they're like, okay, mortgage rates would rise, therefore bank collect more interest rate. That's sometimes what they think. Or auto loan rates rise, therefore, whatever, rates rise, more interest. That's not necessarily the case, because it has to do, it's like a duality of factors, right? So you have rates and growth of lending. Those things have to go hand in hand, because you can have rates rise, but lending declines at a faster rate. So then the net amount is actually less. And this is actually to the detriment of banks, right? So if you actually look at it since that time period, around that time period, well, what did banks do? Banks have not performed very well at all in a rising rate environment, where counterintuitive to what a lot of retail investors might think, they might say, okay, banks would do well. And so when you kind of saw that, we also saw, when they reported, lending growth is going down. Wells Fargo reported, and I still maintain this position. And my wife and I, we were looking to acquire more real estate. I do maintain that position, that I believe after that Wells Fargo report, 6 months to a year, and I'm kind of hoping maybe my area doesn't experience that. Maybe your area doesn't experience that. I don't know, but I'm hoping that we get some good prices finally in some of these areas. But not every geography is going to be affected the same. That's another mistake people can make. They might say, oh, that's going to happen. It's going to happen everywhere. It's like, no, investing is nuanced on every level, from stocks to real estate, and in a variety of key aspects. Geography is one of them. So yeah, I still believe that, 6 months to a year, might see some good prices. I am noticing it in my local area that some houses are actually staying on the market for a lot longer and lowering their price. So I'm getting excited. I'm happy. But all in all, yeah, it's happening over there too. Great. So we're gonna see it. And all in all, as far as the average investor should kind of go about this, and I say this as often as I can, and I'm going to reiterate it here, the vast majority will just do better off, or be better off, by just ignoring it all and just, dollar cost averaging in anyways. So I don't know if you have any further follow-up questions or additional questions.
I do have a little bit of criticism, and I feel like it could just help out. Let's be honest, your videos are very intense on the mind. Let's be honest. You do have to think. You're not watching some guy going, woo! You get me?
Yeah.
But let's be honest. You see a lot of stuff that you cannot watch your video in the background. At least I feel you have to watch. So some advice I do want to give you when you're going over financial statements, because sometimes you jump around between different stuff you're talking about, right? Can you just either highlight it, click and drag, or leave your cursor on it? I don't know if you have like that thing that the cursor disappears, but I feel like sometimes it's hard. Yeah. I feel like sometimes you're going from like this to that, and then I'm like, all right, pause video. What is he talking? Okay, he's talking about that. All right, and then you go, oh yeah, you should look at this, and then stop video. Look, where is that? All right, over there. You got me. Just keep that in mind.
Good.
Not are very proficient in reading those kind of stuff as you, so it's a little hard sometimes, but it's a very very minute thing. I do want to give a feedback on. All right, so also another thing. Now, you have told us that you got in a new job. Am I correct?
Yeah.
Well, first of all, congrats.
Thank you.
Second, can you? I don't want to know where is it at, but can you tell us your position / title? Is that something that you can disclose?
Look, because my wife even warned me against kind of divulging too much information, because she was always scared that some of these companies can consider you what is known as security risk, so security leak risk. So because if I say that, it almost kind of reveals, because the position it's kind of like tied to what the firm kind of does. So Bacon Meme says assistant to the manager.
I read my stucco.
But all in all, I mean, it is with it's within somewhat the field that I currently work in now, except kind of in a different pathway to it, to kind of get different experience in a totally different area. Like when I leave this company, I can definitely talk a lot more about this company, the one I'm working at right now, and I'm actually excited to do that. I won't reveal anything like super personal about anyone who works there, anything like that. But I will be able, or at more liberty, to talk about that in greater detail. But like, I mean, well, technically, I'm leaving like, yeah, in just in a couple days, I'm going to be gone from here. But yeah, meme analyst and creator. That's a good position title. But I know it's it sucks that I didn't answer the question, but I hope you can appreciate. On that one, I'm just doing out of caution. All right, just caution. I can actually tell you
No,
off
understood.
camera there. It's because
All right.
I can't put it out publicly.
No, understood, understood. And sorry to push you.
No worries. No, feel free to push the bounds.
Yeah, just keep pushing, all the way. Question for you. All right, I want you to explain something, right? Because you definitely got me interested in your field of expertise. Can you please tell me the difference between an investing analyst and a banker?
Okay, well, what do you mean by banker? Because I mean, banking, like what, like
Sorry,
a job?
investing banker.
Oh, like an investment banker.
Yeah.
Okay,
Yeah.
so
Sorry.
well, to be very clear, because then an investment banker can watch this and say, well, that's not technically true. I have not worked as an investment banker, so this could be some things, but like an investment analyst. So let's say you're working under the perspective of a fund, right? Let's talk about maybe like a fund. So you're basically tasked with finding out the quote unquote intrinsic value or projections, or depending on what scale you're doing it, what level you're at, senior, junior, you're going to be tasked with a different task. But all in all, as a team, you're kind of working towards that goal of just finding out what is the value of said asset, what's the trajectory of said business, sector, etc. And you might be doing it in-house for your firm and not really sharing it or divulging it with everyone else necessarily, or maybe maybe you're doing it for the clients of the firm to make specific recommendations. Like for example, you go on your brokerage account, and you will see like published research by your bank right there for you to see. You can see that like PDF there. But yeah, and then you might work on the buy side or the sell side, right? So either towards like saying, finding out opportunities that you could, take the long side or take the short side. It really does depend.
Mm-hmm.
And as an investment banker, I mean, I can't really say anything too much to that without saying, some things are probably incorrect.
Okay.
So I'd say, yeah.
Okay. Now, question for you. How? Because I have asked. In fact, I have asked this in live streams before, but now I feel like I can give you a little bit of pushback since I'm in front of you. How can somebody get your level of knowledge? Where would you start them off? Let's say that somebody doesn't go to college, right? Remove the college aspect, right?
Okay,
Somebody
I was about
has
to
to
say
start
university.
from somewhere. You get me? So somebody has to start from somewhere, right? And obviously, I imagine college does add a great degree of confidence and abilities to you. That's what you did, I imagine. Let's remove college. Where will you start pushing that person? Fabio, one, you're seeing kind of a mindset and abilities. Even if it's gonna take me a little bit longer, where do you guide me down this path? How can I get it? You get me? I need to get let's say the chisel and the hammer. You get me, to start sculpting. Where do I get even the chisel and the hammer? How do I get information?
Everyone has to start somewhere, I guess. Like,
Correct.
I mean, it's going to sound very cliche, and the thing is, the reason why I say it's cliche and almost a dangerous answer is the internet. But the internet's also a dangerous place because you can learn a lot of information that's low quality information. So it's almost like easier said than done. Get high quality information than get high quality information from the internet. And why is easier said than done? Well, it's difficult for someone to know what is good and what is bad without already knowing what is good and what is bad. So that's why I say it's like, like I wish I had a better. But university was the default answer. But then even then, you got to be a little bit more cautious about saying that, because university gives you a lot of tools that the student can go above and beyond. Now, what no one is stopping anyone from doing is that the university. Mhm.
What do you mean above and beyond?
Above and beyond is like what I've been saying in some of my recent live streams is that the amount of opportunities or resources students have is usually squandered, and people, I think, go to university too young, and that's my personal opinion.
Mm-hmm.
So when I guess I matured in this part younger than most, I would say, because I noticed even among my peers, they wouldn't take advantage. I think almost every university out there has insane amounts of resources that in the past people could only dream of. And you have access to people within any field that you really can think of. You have access to amount of information that's insane. So not only do you have that information there, there are people who work there who study in that field who then you can go visit in their
Mm-hmm.
office hours and talk to them. Of course, let's say they could be, a dick, right? And they don't want to talk to you. But I've never encountered one. I maybe was lucky when I was a student that all the professors I ever was curious and had conversations with, all of them loved what they did and loved that they found a student that wanted to ask questions deeper and find out, okay, what else could I read? Because when you're also a student, you have also access to the library where you can find research papers, et cetera, and you can basically have at it, go crazy with it.
Okay.
All with that,
Mm-hmm.
there's even like networking events that each prospective institution will have that says, okay, there's these professionals who are going to come talk. Oh my gosh, you have no idea how many times I would go, and people were there just for the bonus points. They'd get their signature and they'd leave, and there'd be like 3 kids staying behind. Only 3
Mm-hmm.
out of like a group of, I don't know, maybe like let's say 40. 3 kids would stay behind to talk to them. And you like it would be sometimes, I don't know, like the CFO of this real estate consulting firm. And it's like, a starting position there would pay 90K, right? Something that some, students would be
Yeah.
like, oh yeah, that's pretty good. And so they'd be like, all right, yeah. So he would honestly like, well, not he would, I'm giving of the way the gender of the CFO, but the CFO would be more likely to have a conversation with you, shake your hand,
Mm-hmm.
share LinkedIn information. And like it was a great opportunity to do that, but these kids like don't do it, and then they go, oh, there's no opportunities, oh, the world's unfair. It's like no, no, and no. And like even when you, let's say you don't have that, because I think you're asking even from that perspective, the internet's also a wonderful place too, but also a dangerous place,
Mm-hmm.
because it has enabled people within any profession to very easily give out information very easily. Like YouTube, I think, is really wonderful. And this is where I say, like, YouTube has its bad, but also has its good. So people who work in any field can pick up a camera and talk, right? I can pick up this camera and I talk. I just share my thoughts.
Mm-hmm.
You can digest those thoughts, and then you can take what you want from it. You can say, okay, that's part I like and I understand, and it's contributing well. But then what I say it's dangerous is that there's also people who have no idea what they're talking about, and they can just as easily pick up this camera, look at the camera, say what it is they want, and then maybe you absorb that. So then it's almost like your duty as a viewer to then try your best to do that. Then you're going to have the people who try their best to also come in and critique all of that
Mm-hmm.
content. So then there's also even a market that's developing um, for that, right? Which is great, because I think there's a need for that too, like the critique of it, because then you as a viewer can say, okay, well, I'm going to watch this critic of this person and I'm going to see what they have to say. Okay, well, what are
Let
they
me now
saying?
let me ask now let me ask something. Sorry to cut you off. How do you all right? Because again, if we just establish what the problem is, right? Let's say if you have a
Uh-huh.
broken leg, right? Well, you have a broken leg. You get me? How do you fix it? Well, you get you cast and that kind of stuff. How can somebody identify when somebody is not genuine? How what from your point of view? What are some cues that not correct?
You see, that's where it's really difficult, because like, for
Mm-hmm.
example, let's say I make up a word. I just make
Mm-hmm.
up a word, and I say it has something to do with finance, right? I say, I don't know, uh, if ifromectamum, right? And I say
Mm-hmm.
we need to evaluate the ifromectamum, and you're like, whoa, that's a big word. Like, what is that? And then like you don't know that that word doesn't exist, right? You're trying to learn, so you don't know that word doesn't exist. And then I'm making that up because I have no idea what I'm talking about. But then how do you identify that I don't know what I'm talking about? I'm giving you an extreme example that will be quick to identify because you just look up that word doesn't exist. So it's that's what part I'm saying. It's really hard. And so that's why I say there's a market that will develop and will continue to grow for the almost like the criticism. Like look at CoffeeZilla to some extent. He comes out in a different key aspect where he criticizes specific creators for specific things, for blatant fraud in some cases. You have, for example, Strongman Personal Finance, who comes out and criticizes, he's a CPA. He comes out and he criticizes various creators for saying certain things that don't make sense. And they don't have, they don't know what it is that they're talking about. So I think that those markets will continue to expand and there's a need for it. And then that keeps it good. So I think, for example, people should engage critics, right? You should listen to critics of your favorite creators or whatever, regardless, right? Listen to them. And then kind of decide for yourself, okay, is the criticism valid or is it invalid, right? Because it could be invalid. There's always going to be like, this is where I say, like, man, the internet can be very dangerous because there's even like the lurkers within the critics part that are also trying to play a certain game too, which is unfortunate. So it's like the answer to you is almost like it's hard. It is hard. And I'm almost like kind of like realizing myself too in saying that it's really difficult. So the only way to do it is to not complain about it and try to fix it yourself. And then that's it.
Would you say you have to maybe lose to win in this scenario?
Lose to win in what way?
Let's say spend a lot of money on a course, let's say, so then you can realize it's false, let's say, or that kind of stuff. You get me? Because
see, that's really painful.
I don't see any other. Yeah. No. It is painful. But my question is, would you rather this happen when you have, example, 20K to your name or 2,000K to your name? You get me?
Yeah.
You get me?
I see.
Yeah, I think we talked about in the past. You get me? There is, it is better, to scrape your knee, if you're, let's say a little kid, then break your leg as an adult. You get me? Because you've never gone through that.
Yeah. No, I get that, and like I wish there was a way to prevent it, because like, for example, I think, and I do believe this, like the market as a whole will be better off with more educated investors. And because all in all, like, for example, we've talked off camera, like my personal beliefs, you shared your personal beliefs, that, for example, I do believe if it does have a ripple effect, like YouTube is allowing a version of scaled conversation, like Capital Mindset's having a scaled conversation right now. You and I are having a conversation, and there are others who are in a way participating within this conversation, albeit not to the same medium as you and I right now, but they're participating. And in that way, I can see it's like doing the part to try to remedy that, because I think that if as a whole, the community or, people as a whole become more and more educated on, just money, like what to do with money, how to at least identify when someone's kind of, I don't know how to say a worse word, grifty, so to speak, that's good. That's a good thing. So
now let me ask you something.
I don't know if I answered your question.
How do you? No, you did. Now, how do you feel? And it's just like your belief in this, right? Because like I said, I think that capital mindset is a little different, because we don't want to hear no buy or sell alerts. We actually want to learn. You don't watch an interview or somebody going over conference call for an hour and a half to hear buy and sell alerts. You don't let's be honest, you don't do that if you want that kind of knowledge. How do you feel? Because now everybody's talking about, let me make a model. Oh, how can I get a model? How can I do that kind of stuff, right? How do you feel being, and this is what I feel, how do you feel being one of the guys, that's changing the meta, I think, of, YouTube investment? You get me? Thanks to you, thanks to Chris, you get me? I feel like now everybody's talking about, we have to put some stuff in a model. We have to model out, before, thanks to some creators in the past, it'll be just look at PE, and look, how many, how much cash they have on the balance sheet, and if the revenues is going up. How do you feel about you, let's be honest, because you contributed to this, how do you feel about making that change?
Good. Because I mean, at least people are just thinking about those things. Of course, let me just be
Yeah.
very clear. There are almost like an infinite ways to design any form model. Because at the end of the day,
Mhm.
there's
Mhm.
you can be very creative with mathematics. Like my brother's a mathematician. I don't know if
Mhm.
I've ever said that to you, but my brother's a
Mhm.
mathematician, and so he graduated, or he's about to graduate actually. He's going to pursue his PhD in
Mhm.
mathematics. And I'm actually getting him to where I want him to eventually work with me. And
Mhm.
it runs in the family. Like we're all pretty good at math. So I actually went when I did my IB diploma. That was my high school. I did IB diploma. I did IB math on the higher level, and then in university it allowed me to skip. But I did math anyway to kind of revisit, and I thought of it as an actual GPA booster because I like math. I'm a little bit a
Mhm.
math nerd, you could say a little bit. But and one thing I would say is there's so many different ways to design these models. So I like that more people are kind of looking into, well, how do I do those things? But I also want to almost caution you and anyone that like
Mhm.
be careful, because then you can start to say or blind yourself to that model. And if you designed it poorly, or whoever designed it and is providing it to you designed it
Mhm.
poorly, well, your results are going to only be as good as it was designed,
Got
which
it.
is a
Got
problem.
it. Yes, yes, but now, on the flip side of that, right? Let's be honest, right? I feel like it's by stages. You get me? It's better for,
Yes.
at least
Oh, it's so much better.
I feel like it's better for somebody that blows all their money, in trash, literally, just buying random
Yeah.
stuff, to at least invest, let's say trash stuff. At least I feel that
Hmm.
that's better, just because you're making that step.
Yeah.
There's
Yeah. No. No.
more
No.
possibility of correcting yourself, right? Then,
Yeah.
like now, let's say this is better, right? From going from PE, cash in the balance sheet, and revenue by avenue, right, to now, at least a bad a bad model. You get me? I feel
Yeah.
like it's better.
Yeah.
I
Yeah. No.
just
No.
feel
No.
like just that transition is better than not.
No. 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 It's infinitely better. Like if I'm saying someone's
Mm-hmm.
like they're building like a very basic DCF model that you would learn in like your finance, the very beginning of your finance degree, right? That's something you would learn literally, I think, in one of your first classes, right?
Mm-hmm.
Um, if you're using that versus just going off of like those metrics that yes, other creators just kind of preach.
Mm-hmm.
Absolutely, that's infinitely better. That's infinitely better because at least it's spurring the mind on curiosity, on looking past and trying to figure out what is actually underneath something that can be evaluation, not just a simple gap PE basis, right? Because that just if investing was that easy, I mean, come on,
Everybody, everybody can do it. Yeah, pretty much.
Yeah.
Because let's be honest. Not a lot of people can do the plumbing to their house. You get me? This is pretty much, I feel like, same kind of knowledge. You get me?
Mhm.
There is a reason why people spend just so much money going to college to learn this kind of information.
Yeah.
Now, some people
Yeah.
make overvalue or undervalue for that information, but it does cost something. It isn't something easy for everybody.
Hmm.
Let's be honest here.
Yep. And this
Um,
is where
mhm.
I want to actually highlight something there because the cost of university is something that I want to say because I think, and the thing is, I also had a tutoring business. I helped a bunch of students over the course of, I guess, geez, how many years has it been? I have like two or three kids that I still help today. Because their families have been clients of mine for quite some time, and I've tutored like the older kid, the younger kid, and so I've helped a lot of kids actually get into different universities. And so it's good because when I have kids, I'm going to help them a lot. Like I know how to pretty
No,
much help them out. But
on top, the good thing about this kind of information is, let's be honest, 99% of the population don't have it, right?
yeah,
It does give you a skill, you get me, and then you could also literally apply it to your job. Like you're doing it, you can make a YouTube channel. You can do
yeah,
like Strawman. He has his own tutoring business in YSM, I believe. You get me?
mhm,
It's not just once you have it, you know, once you have a hammer, right, you can take down any wall. It's not just the
yeah,
wall that you have to take down. You can take down
exactly.
anything. You get me? And that's why I think it's something good. I have this question written down, right? And
Go for it.
I want you to explain why, and I want you to be as detailed as possible, right?
Okay,
What are
and
the
I'll
top
ask
five
you
class?
something.
Mhm.
I'll ask you something, because I get on tangents a lot. So then bring me back to it if I get off on too much of a tangent, because
No,
I'll
you're good. No, no, no.
accidentally leave that.
In fact, I think people do like your tangents. I feel like it's not just a question. People want to hear everything around it, as long as you actually finish up the actual question. Um, what are the top 5 classes in college that contribute to your knowledge that you have right now to value stocks? I want you to give me 5 and then explain to me why those 5 and what can you give me an example of
Do you
why
say top
those
5
5 are
factors?
classes in college?
Oh, classes in college. Oh, absolutely. All right. So, um, the number one. So, in order from worst to best or best to worst, how do you want it?
However you want to talk.
I'll do
How
worst to
much you gonna
best.
write it down? What you gonna write
Yeah,
it
I'll
down?
do worst to best. So, honestly, there was a class that. Okay, so I guess the worst one was the very first accounting course. The
And
very
this is
first accounting
still
course that.
sorry to cut you off. And this is still, but you still, I mean, it is from best to worst, but it's still good that you took it. Like you don't
Yes,
regret
yes,
it. Okay,
yes, and there's a
what is that?
reason why. So,
Okay.
financial accounting, which is the first accounting course, it was the one that
Mhm,
gives you the introduction to the financial statements.
mhm.
Introduction stuff is always good because it's the one that opens your mind. So it has value inherently. It's the worst one because it doesn't go as in depth as you should be, but it's the one that provides the introduction, saying, "Hey, this is all the financial statements. This is what they do. How to balance a balance sheet, stuff like that. Very basic stuff." Right? And you should be able to pass that one. It's pretty basic class, but it gives you that introduction. You're like, oh, okay. Then I guess the one after that would be one of the very first. I believe it was called corporate or business finance, one of those names. All right, and then that one was also good for the similar reasons: an introduction to MPVs, discounted cash flows, all that stuff.
Sorry,
Very brief.
can you say again the class? Sorry.
I think it was either called business finance or corporate finance. I'm pretty
Got
sure
it.
it might have been business finance, because there was two that had that name and then interchangeable. And depending on the university you go to, the names are a little bit different, but
Mhm,
more or less the same material.
mhm.
And then I guess the other one was an appreciation, um, portfolio analysis, which was another one, portfolio analysis and management. That one was a really good one, because that one, I had a professor who was a huge index bug, and he was trying to drill into us the different the difficulty of actually outperforming the market, and he was really drilling that into each of the students. And he actually did the experiment, which at the time, well, I won't actually get into. I'll tell you off camera, because it's a funny story.
Okay.
Because if I say it, not really gonna do anything. But um, so that one had a lot of value because it gave you a lot of different perspectives, and the professor was really trying to hammer that home. And even though you were doing portfolio design, a long short portfolio means you have some long positions that you try to design, and you have a short portfolio that you try to design, and you kind of try to counterbalance them and try to improve your. Yep.
Will something like that be like, let's say, give an example, TTCF. Let's say I'm investing in it, right?
Yeah.
Let's say I buy a lot of stocks and then I'll just buy like a put. Would that be like a long short portfolio?
If you have a long position and you have a short position, you're
It has
building a
to be
long short
short,
portfolio.
or could it be like a
No, no,
put?
no, 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 no. It's that you benefit during a drawdown, and
Okay,
then you benefit
okay,
during a run up. So not
understand.
necessarily the exact same stock. So if you were confused by it, no, it could be a different set of stocks. So like,
Okay, okay,
let's say you're like Michael Burry, you're shorting Apple, but you're long Facebook, right? You have short positions, you have long positions. So you have a long short portfolio, and you're trying to improve your risk adjusted rate of return, risk adjusted, which is another kind of thing. You measure that using the Sharpe ratio. But anyways, regardless, so you have that, and so that was a good class, I'd say. And then kind of getting to the upper end, so we're at the top two now. I'd say that I'd go with either. You know what? It'd probably be the because I had a professor, which I actually should um, remind me. Even saying this makes me think I should actually email him all these years later and tell him like what a awesome class he had, because he was supposed to teach us cost accounting. That's what he was supposed to teach us. What he instead did was he said, "You guys learn cost accounting all on your own. I'm
okay,
not going to teach you cost accounting. We're gonna study data science, and we're gonna spend the entirety of this class doing data science." And so because he said correctly that and he was very correct in doing so, that the industry as a whole is going to transition more so that people in this space, it's going to suck for the older folks, but the younger folks coming in, we can kind of make those adaptations. And I think the firms are kind of understanding of that, by the way. So they're only requiring this of the newer people and joining. It's going to transition towards, you almost have to be really good at data science, not only just about finance or accounting. You got to be good at almost like be really well-rounded, which is almost like encouraging to me that I'm on the cusp of desiring to actually go get my master's in data science. On the cusp. I'm actually like most likely going to do it. After I pass all my CPA exams, I'm probably going to do that. But which by the way, should say something of the importance of that field of study.
So question,
But anyways,
over here on my end, I have financial accounting, business finance, portfolio analysis. What else?
Portfolio analysis and management. That's what is the name of the course. And it could be called something else depending on your institution. Then the one after that was, but the thing is, they have a dedicated class now that I also did take as well. But it was kind of more in the development, which is some form of data analytics class, because it gives you an appreciation for managing, analyzing, cleaning up large swaths of data, and then deriving decisions from it. I think, for example, if you don't know how to do that, there's going to be a severe, how do you say, disadvantage someone may have in entering the field in the coming years. I think that's where it's
that you could, through your experience, is data analytics, is that something that you can learn just by actual work training, or do you need to?
Yeah, no. Work training is actually where a lot of it is going to be coming from, because you actually do in a lot of ways need hands-on. You need hands-on experience with a lot of these softwares. You do need to kind of figure out how to kind of manage large swaths of data. It's something that in the theoretical of a classroom, right? A classroom can give you that academic experience, that theoretical experience, and then there's something else. There's something different about having it in your hands and doing it, and you're doing it for a specific purpose, not just the theory where you have to hit all the check boxes and stuff like that, which is different. I think, for example, most curriculums, if you don't see that they are having that exposure, or they're not giving that exposure of data analytics, be very weary of that, because the industry is actually really moving in that direction, where they're demanding that you're not just someone in doing finance or accounting. You have to understand data science, which, by the way, like we talked off camera too, I have basically, I'm at the end of it. I'd probably have to take like 2 or 3 classes, and I'd have another degree in biomedical science, which is an absolutely useless degree, by the way. But yeah, absolutely useless degree unless you're going to med school.
Finance accounting, business finance, portfolio analyst / management, data analytics. 5th one.
Yeah. 5th one is almost like a tie between it actually is almost a tie between 3 classes, because they're very similar and different at the same time. So they were both called, both intermediate accounting classes all count as one class, because it's such a big, such a large amount of information that they really separate it into 2 classes, 1 and 2. I'm going to count it as one class in this group of 3 classes. And then another one is advanced topics for accounting or advanced topics for finance. Most people, but here's the key detail with that one. Anyone's experience could be very different in the advanced topics courses, because, like I said, resources at universities are very rich, and it's up to the student to go out of their way to kind of say, okay, I want to get to know my professor even more outside of the classroom. Even if your professor works in the industry, learn from them too. And I just want to mention, because I don't want to forget this, Sparky's comment is, I just saw it off the corner of my eye. This is actually very true. And Python is not difficult to learn, by the way. It's actually one of the easier ones to learn. And if you're really good at Excel, Python won't be too out of the way for you. Like, if you can really design formulas in Excel, you can design Python. Now, whether or not you're going to be good at designing clean code versus dirty code, separate story, but it's not that hard.
Who did that message? Sparky?
Sparky.
Hey, Sparky, appreciate that comment. Thank you.
So in data analytics, understanding Python, at least understanding it, is really good, because a lot of businesses are going to make you use, something like Tableau is pretty easy to use. Tableau is owned by Salesforce. Another one is Alteryx. Alteryx is a low-code data analytics platform, so you don't really need as much experience in that front. But yeah.
Okay. Well, thank you for your feedback, Fabio. Let's see what else. All right, something. Or I'm gonna put myself out there and say it. I used to be part of German's course. Something good that I wish you could at least make an independent video about it. I don't think it's gonna take too long. I think it's gonna be very complicated for you to do it. If you could make a simple video, it doesn't have to be very complicated. The five things in order that you should first do when you are looking into a brand new company that you know nothing about. Let me give you an example. Let's say you're looking at financial statements, looking at what a company does, looking at the investor presentation again. But at least you feel like you should give people some kind of cheat sheet, let's say, for lack of a better word, you get me, of do this five things. Because I feel like you said, investing is nuanced, you get me. But I feel like there has to be some order to the madness, in order to do some stuff. Because I feel like you sometimes you go into this and so much stuff, and let's be honest with you, you can get as detailed as you want. So the more every single layer, there's more and more and more and more and more you get information. So I feel like there should be like some kind of like, hey, this way, you get me. At least this is the first five things you want to do, right? And then from there you can go wherever you want to do. But the first five little steps, something that I thought that maybe I really want to share with you. Any
you want it now? We can do it now.
Sure. I mean, well, I feel like it should be good if you make it a video, just to save it, for later on. But if you want to do it right now, you can do it twice.
No, I'll do a video on it. But it's basically like it's what is that? Like a filtration process. That's basically what we're
yeah. Just to give new ideas. Because I'll be honest with you, imagine going from cash in the balance sheet and PE ratios to CapEx and long-term debt and what is inside that long-term debt. There's a big step in between those two things. You get me? So something I think that we should provide value.
Yeah, and that's one of the harder parts, is like realizing that there is like a step or that big step, because when you're kind of been doing it, especially for many years, it's you lose sight of that it's like, okay, there is a part where people are like, what the heck is that? What does that even mean? And if you don't explain it, you kind of get lost. And I understand that was like what you said with your criticism, that my videos are sometimes too not forgiving of
they definitely are. And I'll be honest with you, there is something good, right? Because it pushes you. You get me? You're not gonna, the video's not gonna slow down. I can't say, hey, Fabio, wait, don't go that fast. Unless I literally, put the speed down with that kind of stuff. Yeah. But if you don't do something like that, you get me? You do push people to do it, right? But I feel there should be some kind of bridge. Hey, little by little, let's take it over here. All right, so I mean, there's just some kind of the same question I wrote twice over here. Can you tell us what job will give you the ability to evaluate and create models for publicly traded companies?
I mean,
where did you learn? What was it that you learned? You learned that, and what's the class? I think you said it was in what would that be? In data analytics? Is that where you learn how to model?
No. Data analytics is teaching you basically how to derive inferences or conclusions from a set of data. That's what data analytics does. So like, for example, one assignment, I still remember it, was to actually program using language R, which my professor was the kind of guy who liked to make you learn how to swim by throwing into the ocean and letting you figure it out. You had to program and find out, or use a program and actually code in R, and come up with a something that could read a 10K and provide a smiley face or a frowny face every time. And it was supposed to be a lesson on visualizations, why visualizations are so powerful, because visualizations can give us a lot of information very quickly to a management team that would be reading this report and saying, oh, okay, that's basically what I need to care about. A lot of smiley faces means it was a lot of good news. A lot of frowny faces means it was a lot of bad news. So we had to basically figure out a way to program it to read a 10K for us, give us a bunch of smiley faces or give us a bunch of frowny faces, and then put it in a chart to kind of count how many frowny faces and smiley faces there were. So
Pretty
that's
much
that
like
class.
a ratio pretty much, but just translate
Yeah,
into
yeah,
the
literally like a sentiment ratio, which is
yeah.
really funny, and like to say that some that is doable is awesome. Like, but
I'll be honest with you. You can honestly pretty much do pretty much a stock model just with frowny faces or like a normal face, a frowny
yeah,
face, or having you can literally do it that way. I never thought about it. Yeah.
yeah, you could. I mean, that could be like a quick summary, like frowny face or smiley face for this. But obviously, like, got to be a little bit cautious with that because there's nuances, and the model is just a
Yeah.
tool. A model is a
Yeah.
tool for a person. So, yeah, and someone just said that sounds like a Jeremy investing strategy.
I was gonna call it out right now,
Yeah,
JP.
it probably is. Uh, I if I designed it, I would sell it to Jeremy for $2 million, and then he could
But
just
I'll
use
be
it
honest
to.
with you, it's kind of the similar kind of thought that you have it in your model of green and red.
I
Pretty
did
much just
that
a
for
quick
that
way of
reason.
telling you.
Yeah,
Yeah, pretty much. Yeah,
I
because I'll
did.
be honest with you, I imagine it does get a little hard just to look at numbers and numbers and numbers and numbers.
Yeah,
Something
yeah.
easy for the eyes.
Yeah, we are programming it for it to be very user friendly. So like the green and red is intentional. Green means good, red means bad, right? So but that you have to kind of take that into consideration when you're doing anything that's going to be presented to people, right? Not just to yourself, because maybe you don't care, but other people are going to care. But you would say you asked for the class. No, the class was actually, I think, really portfolio management and advanced topics. All of those covered it. All the finance ones really covered it in some degree, but advanced topics covered it the most, you would say. But in a professional setting, there are programs, for example, like one of the way that's very traditional, like the way I went is not very traditional. And I'm not going to pretend like it's something that everyone's going to be able to do. Because like, for example, the firm I'm at is not really going to be hiring. It's very like closed. Like it's very, but it can be extremely lucrative. The more traditional one is to go for the bigger firms. Bigger firms, you can still make good money. You're going to make more of the salary form, and you're going to get a lot of good training. You're going to get like good mentorships, but and you got to rise up the ranks and stuff like that. So that would be at JP Morgan Chase, like the traditional ones, right? Or you can find, like, I had a friend who he works at, I forget what fund he works at. He works at actually a local fund. It's private equity, and he's an analyst there, right? So he got a job there, and he learned on the job. And he was a junior analyst. He's moving up to senior analyst because now he's been there for quite a bit of time now. I forget really precisely when he started, but yeah, that's one way. You can do it that way. And there's honestly like a lot of different ways, and everyone's gonna have their own style. Everyone's gonna have their own focus. Depending on what team you get at, because for example, you go to JP Morgan, they're going to separate you and they're going to try to figure out what you're really good at. Are you good at fixed income? You good at long, short, sell side, buy side, is what I'm saying. But yeah.
So, all right. So pretty much I only have one question left. Later, but I do have maybe some stuff on top of my head. I want you to explain to us something very important. Can you explain what PS is? Price of sales, right? You have said in the past that it's not a valuation metric; it's a comparative metric, correct?
Yeah. Yep.
Can you tell us? Break it down again. We're five. We're all five.
5
Break
years.
it down. How does that? Yeah. How does that compare to a PE? Why is one? Why is one comparative, and then why is one evaluation?
So one is evaluation because, like, for example, PE is more of a valuation metric because it takes into account the profit, not the economic profit, the accounting profit of a firm. And it takes it by the price that you would buy it at, because profit is after everything's left over, right? So what money do you make after everything, after all the expenses, after paying all the employees, et cetera? What do you have left over? You have, let's say, $1,000, and you bought a company for $10,000. You have a PE of 10, right? So you pay 10,000 for a company that produces $1,000. Over time, that's an evaluation of saying, okay, well, how cheap is that enterprise? Does the sales matter? And if I was doing this, and this is why I'd say to you, be very careful when someone says that word, that price of sales is one, right? When we're looking at a private company or a public company, we take a lot of the same exact principles with us, right? And we were actually, when I just came back from vacation, which this is actually what I have to go work on, is that we're about to close a new deal on a new private firm. And we, at no point actually did we use price to sales ratio. At no point did we even care to evaluate price to sales ratio. We didn't care. There's no reason to look at it, because why do I care about the price that we're paying relative to the sales of that firm? I don't care, because that's irrespective of the margins the firm produces. And let me break that down. So a firm that sells $1,000 in sales, or let's use more realistic numbers. Let's say 2 to 3 million, right? 2 to 3 million in sales. And let's say it generates $1 million in profit. Well, those margins pretty strong, right? 33% net profit margins. That's pretty good, right? And then I have a similar firm sitting next to it, and has also 3 million in sales. And let's say I'm going to buy the firms, or the firms are asking for the same price, right? Because it's in the private market. So say the owners are asking for the same exact price. They're both asking for 3 million. They're both at a price to sales of 1. And so the second firm that also has 3 million in sales, they generate 500,000 in profit. Okay, so half of that, right? So which one is better than the other? Obviously, the first one is. But if you use price of sales, what are you really evaluating with that? That's not necessarily the same thing, because they're completely different firms. I can probably tell you they're going to be different firms. If the margins are that drastically different, or something's wrong, well, one of the two is wrong. But most likely they're probably in a different company, different maybe area. Something's drastically different for them to come up with those two margins, assuming the books are correct, etc. And with price of sales, all you get to see is, okay, well, that one sells this. Can you pay your bills with the revenue? No, you can't, right? Well, can you pay like your bills as the investor? Let me be very clear. The business does, right? The business, gets the sales, and then they pay down the line, right? You can expense things, right? But the investor, you get only, or the owner gets only at the end of the day what everything is left over. You can't pay the bills if you just have a million in sales, but nothing comes down to the bottom line. So what do you care, right? I can tell you, we can make a $100 million business. We can do it with $200 million. I always use this analogy. I'll use it again. If we have $200 million, we can give people $2 if they give us $1. There you go. We have a $100 million business. We had $100 million in sales. What does that say anything about the quality of the business? It doesn't. In fact, if you just look at that and you're like, wow, look at those sales. And then let's say we try to sell the company for 50 million. Someone's like, oh my gosh, a price sales of half, right? Crazy, right? No, not good. So you can use price of sales in a comparative way. So you take two companies that are very similar, very, very, very similar. Let's say they're two identical companies, two ice cream stores next to each other. And then you say, well, this company has sales of 1 million and they're asking for 500,000. And the other one has sales of 500,000 and is also asking for 500,000. That you can look at it as one thing that you look at and saying, okay, well, the sales of this one is relative to that one's okay, because they're the same kind of company. They're in the same kind of similar position as the other one. So does that make sense?
Yep. Hey, Fabio, give me 1 second. I'm gonna have to.
No worries. All right. So while he's taking a little break, I'll answer some questions in the discussions. Okay. So I won't answer all of them. No promises on that. So and I won't get to all of them. So I'm just looking through them. This one's a good idea, by the way, for that videos. EBITDA. That's funny. BP, do you even watch the Capital Mindset show? I don't know if you know anything that happens here. Okay, so we're back. All right. Yeah, I got to like just very few.
Yeah, sorry about that.
No, you're good.
Okay, question now for you, right? Can you help me? Can you help me understand that you don't have a model, right? Again, let's be honest. Models, they don't make you good. They help you. It's a tool,
they're a tool,
right?
Yeah.
They're a tool, right? Okay. How can somebody then look into, let's say, a Palantir, right? That's unprofitable, right? Without, obviously, price to sales doesn't apply. It doesn't have a price to earnings. Doesn't have any earnings. How are you going to be able to look at some guys?
Okay, well,
And again, I just gave Palantir, just to give a bit.
yeah, okay. I was going to ask you, which stock did you use? Palantir. Okay, but the thing is with Palantir, I think almost like Peter Lynch is right in this instance. Like, this is where you start to say, how much work are you going to have to put into this company to understand it? If it's a lot of work and you really can't understand it at the end of the day, should you really be invested in it at all? Because the thing is, it is not necessarily true that you have to understand every single company, like down to its nitty grittiness, right? You don't need to do that. I think that's the extreme case, or the extreme example, like what some people say you have to do. No, that's not necessarily the case, but it depends, because some, yes, right? So ones that are highly dependent on, for example, commodities, right? So you have to understand that commodities market, right? Let's say it's about the coal industry. Well, do you understand the coal industry? Do you understand the movements that are going around in the coal industry? Do you understand the policies that are potentially going to be passed and how they might affect the coal industry? Do you understand those things? If so, yes. And then the only one lying, if you're lying to yourself, the only one you're hurting is yourself. If the answer is yes, though, truthfully, maybe you belong in investing in coal companies. Maybe you do. Or investing in some capacity, maybe shorting them, maybe experiencing the long side of them. Or, kind of, let's progress that to Palantir. So do you understand what the technology does? Yes or no? Do you have the time of day to fully understand what the technology does? Yes or no? How difficult will it be for you to fully understand what the technology does, what the industry is doing? What are the competitors doing? Very important. So yes or no? And then if the answer is yes to all those things, maybe you do belong investing in Palantir, or maybe shorting Palantir. But my point is getting exposure to some way in Palantir. Because then otherwise you're going to be predicting or guessing that the rest of the market is going to get very excited about Palantir. And, they're going to just bid up the stock price. Maybe that's your goal. But then you're going at it from a different perspective. You're coming at it from a momentum perspective, a trading perspective, and that's a whole different game. So to answer your question, how would you go about it? First, I'd stick to try to find companies that I can understand. What are companies that you say I can understand how it is that they make money? I don't have to understand every single piece of it, but I understand how they can make money and what they can do to fuck up. There, I cursed, so now we're demonetized. But
man,
yeah,
this is gonna help me cover my my, what was it, 40K a second bill.
Yeah, 40K per second.
Per second. Okay. Now, how can it? All right, let me ask you now something, right? How important? Because at least, let's be honest, I don't have it. And I will go on record saying I don't have as much knowledge as you. You're more advanced in the field than I am. So something that I look into, just kind of a way of protecting myself, right? I like to look at companies that have a lot of that their owners, the management has a lot of equity into it. You get me? Has a lot of shares into it, has a big portion of it.
Yeah.
Because that helps me out. You get me? That gives you some kind of protection, right? Again, they could mess it up. You get me? Again, all right. Let me put it to you this way, right? At the end of the day, all right, let's put it to you this way. It's like mad. You get me? You show a short destruction. You get me? You can, if you're gonna destroy me, you're probably gonna destroy yourself. You get me? So that
depends.
All right. What do you mean by that? What do you mean?
How much of their percent of their net worth is in that company?
Okay.
So let's say they own 15% of the company. You're like, that's a lot, right? If they go to zero, they're going to lose. They're not going to what if it's only like 5% of their net worth? Now, do they have, yeah. And then also, here's the thing. How do you know that sometimes management owns a lot of it and they can do some shady things? There are some companies that I have been very scared to talk about on this channel for lawsuit reasons. And I can't, back when one of my best friends was on the, so I'm going to be careful how I say it.
Before, no, you don't have to say the company, right? But what do you mean of like they can do, what do you mean by that?
So, and I'll kind of give some further context. Back when one of my best friends was on the show with me, we uncovered a company that had a very large insider ownership,
Mm,
but and it was disclosing everything, by the way. Very small company, very small market cap.
mhm,
The company will never remain unnamed. Out of I gotta be careful, guys, because of out of fear of lawsuit. But the um, the company in question, the owner, the big owner, he was doing some deals where his company that was publicly traded acquired one of his privately held companies. He gave himself a payday, a huge payday, right? And the company that he owned actually was, this guy's also, by the way, he's been arrested before in the past. It was easy to find out. He actually went to jail in the past, and supposedly he's a changed man. Very unlikely, based on what the behavior we found that he was doing. Very unlikely that he's a changed man. And he was doing things that you would say, okay, well, that's just squandering shareholder wealth. He was making these acquisitions and basically giving himself a payday, and he was paying himself a very high salary. No, it was not that company. I just saw someone guess the company. It wasn't that company, but I wouldn't be surprised if that company was doing something. And so he had this huge holding. I can't even say the name of the holding because that would again give away the person and the company and then get me in trouble, maybe potentially. And I know that this is the type of person that would do a frivolous lawsuit, that would just like sue you just to shut you up, right? And just keep on suing you, right? But I am actually blessed because when I did do my tutoring business, one of the things that tutoring business gave me was a lot of interesting connections. I tutored the daughter of a guy who owns a law firm for about 6 years, since she was in middle school. So he of course promised me that if I ever needed to, I have the use of his law firm if I ever needed it for defending myself or anything like that. But anyways, I still don't just want that. I don't want to go through that. It's a headache, if anything. But anyways, going into this, the guy was doing some interesting things. He owned a lot of the company. Some investor, a retail investor, remembers those rules and saying, you want to look for high insider ownership, et cetera. They're looking at that. They're like, wow, that's great. That's great. They would have not understood. And I think, let me actually see on the side, because I don't want to put, the stock up front, but let me actually see what the stock price is doing. Oh, wow. It's actually fallen nicely now.
Now, let me
Yeah.
explain this for you. How far, because I'll be honest with you, something like that, right? It's very small. You get me? You have to like
Mm-hmm.
deep, dig into this to like actually find this out, right? That's something very small, right? How can somebody go into an investment knowing every single little thing? You're not.
Okay, but that's just it. You don't need to know every single little thing. But like, for example, that's why the majority of people, and I think we were
Mhm,
having this conversation about your significant other, is
mhm, mhm,
they should just
mhm,
be in total
mhm,
and broadly diversified index funds and just forget it, and then dollar cost average over time, because there's a lot of dangers out there when you take on individual stock investing. But to some degree, you can diversify your holdings in terms of picking multiple stocks. You don't put all your eggs in one basket
yeah.
when you're in the stock market. Individual business owners, like, let me just say, it is going to be far more difficult for any of you, anyone here in the chat, me, to generate the wealth that you think that you can generate in the public markets that you will in the private markets. The private markets will always be far more lucrative, in my opinion, than the public markets. The public markets gives you scale, though, right? So the like most of the acquisitions that we do at my work currently are in the private sector, right? We acquire
Mhm,
private companies because the rates are a lot better, right? The cap rates are a lot better in real estate. The multiples, you could say, price to multiples that you get in the private markets are absolutely ridiculous. You'll never find that in the public markets. And we can do a lot of tuck-in acquisitions and improve some synergies here. And all of that is really awesome. And that's going to generate a ton of wealth. And so you see a lot of small business owners, like, what is their portfolio size? It's like they're small business and that's it. And they can become
mhm,
very, very wealthy, right? They become very wealthy individuals. And then what they do is with the extra money, they can invest it in the stock market. But they have like one big position that makes up a vast majority of their net worth, which is their small business, or maybe it's a medium business, or maybe it's even a big business if they get lucky. But not lucky. I wouldn't say it's luck, but if they work hard. And then so with the stock market, you can think about position sizing and separating your holdings over multiple asset classes, right?
Mm-hmm.
But no one should kid themselves in saying they're going to become the next Warren Buffett, right? It's most 99.99999% sure you're not. No one's in this chat's going to become one. Very, very difficult. So, but you can become very, very wealthy. You can become like multi-millionaire from the stock market for sure. It's doable. It's if you prudently invest and you focus on certain key aspects of compounding, and it's more about increasing your income and then putting more away and then generating a reasonable rate of return. Yeah, that's very possible. You're not going to become like a billionaire, right? Very unlikely, but yeah. I don't know if I answered your question or I went on a tangent. But
No, you did. You did good. So now let me do something, right? Let's say Facebook, right? Let's say we can both.
we're getting
We
individual
can both
stocks.
have it.
Let's go.
Oh
Let's
yeah,
go.
yeah. Let's pump. Let's pump.
Let's go. Let's go. Pump.
Let's become chill. Let me something. So let's say, because I mean, you said in the past, right? You personally, you believe, through your research, that if I'm not mistaken, it was a buy around the for you. It was a buy for you, not financial advice. That was that was interesting around the 150 for you, if I'm not mistaken, something near that, right? Now, let's say that you do believe that it's going to go to 400, 500, 300, whatever price you want to put it at, right? Why not buy at 200? Why at 150? Is that $50 a big
but
difference? And now let me ask
but
you
a lot.
something else, right?
Yeah.
Oh, sorry. Let me ask you something. It's not timing the market. It's not timing the market. Let's establish that, right?
Yeah.
But isn't it throughout history how we learned that it's better to just buy and hold? Let's say you do buy it at 200, right? And you do know it's an amazing deal at 150. Just to give rough numbers, right? If you see it falling, wouldn't it be a smart idea to buy at 190, 180, 170, 160, 150, and then back up? Because I know you also do this kind of stuff, right? But I want you to explain it. I want you to give full light on this idea.
Well, very interesting you mentioned that. So I'll reference all the other videos on Meta that I made because I was buying Meta at those prices, right? I was buying Meta at I believe it's like I think I bought some at the let me actually pull up on the side here. I can actually pull up my buy orders and I can actually quote it more directly. And I pull up my Meta. Where are you?
So, question:
Meta.
you did told me right before we started the live stream, if I was able to pump it to 300, I was free of charge this live stream, right?
Yeah, you don't have to
Not
pay the
free of charge.
$40,000
Right.
per second.
All right, guys, help.
If it gets to there, you do not have to pay $40,000 per second with a 20% interest rate compounded every half second.
Yeah,
So
there you
yeah, that would be absolutely. Can you imagine, man? All right,
go. Imagine.
I'm still pulling it up. Hold on, sorry.
You're good. You're good.
So all in all, where is it? Okay, found Meta. Why is it not alphabetical? Oh, it's because by position size. So I click here and then I click transactions. So let me see. Yeah, I bought it at 219.15. I bought some at 195, 174, 192, 155, a more recent purchase, all the way back in the day at 133, some at 149. You see, like I've actually Meta's not that new of a position. I've actually ruined some of my cost basis in Meta, and I was buying at 200, but like it dictates the size of the purchases. So yeah, to answer your question, no, absolutely, because my strategy typically is I like to find out a range in which I'm attracted to a stock, and then I will build out a position over time. And I kind of evaluate it from the perspective of, well, what are the cash flows coming in? How much money is coming in from my end, from my income, from my job, etc. And then how can I contribute and follow that strategy over time? I think it's very different when someone is coming from this perspective and they say, I have a fixed amount of money. I have $1 million and that's all I have. I don't have any more money coming in. So that's a very different strategy than I have $1 million and 10,000 coming in every month, or I have 100,000 and have 5,000 coming in every month or etc. Or I'm just starting from the beginning, right? And then I'm just building up, and I have 10,000, and then I have my salary, and I can put $1,000 every month. See how the strategies are very different. If someone came to me, if a family member, because not financial advice, if a family member came to me and they inherited, let's make an argument of whatever, $1 billion, and then they go to me and they say, okay, Fabio, as my family member, what do you recommend that I do? I would say, you give me all your, no, I'm kidding. That's a joke. But no, in all seriousness, I would say to them,
You were
okay,
quick on that
evaluate.
too. You were quick on saying, "Give me all your money." Wow, like you thought about this in the past.
No, so I'd say to them, okay, what are the odds you believe you're going to make $1 billion? Right? Because even let's say they're young, and this, I use this analogy in the past, and people have heard this and be like, oh, this again. So when you come across a lot of money and you're young, I would say, no, that's not true. That you're young, you can take risks. It's nuanced. How much money do you have right now? What is the probability that you're going to make that up? Because the real answer is, if you're young and you're starting out with a very small amount of money, you have the opportunity to kind of take on that risk. But if you're young, you have a lot of money, what are the odds that you're going to make another $1 billion, right? Okay, so you should be focused on capital preservation, even though you're young. Okay, so yeah, that's that's honestly like the different perspectives there. So I take that into account, like, okay, how much is coming in, and then I strategize, okay, my purchases, and then I'm going to be buying. And I like to always be buying. I was buying even when I was saying the liquidity crunch is happening. I still bought stocks. I bought Meta. I bought I think I just barely bought. I bought barely any stocks really in terms of dollar amounts. I bought Meta, or I added to Meta. More like saying added to Meta. But then I sold some stocks. I sold during the liquidity crunch. I sold ConocoPhillips, BHP. I don't know if I still hold some Rio Tinto. Let me check.
Why?
I
Now my
should know
question
that,
is,
but
why do something like that, and why not have everything? Why not? And again, it just comes to preference, and again, your knowledge. It'll be a lot hard for me to do something that you're doing. You get me? But why would you? Why? Let's say, what was Meta before the liquidity crisis? I mean, crunch.
no, we can say the word crisis because it's funny that people say
Crisis.
it now, like
Liquidity crisis.
So
There's
you can
nobody
see
on the
that.
other side of buying. There's nobody. Just like that, they said it. There's nobody on the other side. I wonder. Oh, have I heard that before from somewhere else?
Yeah, I know. So actually, Meta
We'll look at
almost
that.
kind of poetically went down with the where I was making those videos about the liquidity crunch. So I didn't even realize that. I should actually talk about it more than be like, yo, look at this. So yeah, Meta in January 7th was at 331, and then towards the end of January, when I was already making like the dedicated videos, the memes that were funny. I think the memes are funny. I'm biased about my own memes, but obviously I'm going to say my own memes are funny. But like from January to February, the stock collapsed from 300 to 237, and it kept going down. And since January, it is down 45%. So
now my question to you is why not? I mean, if you believe that Meta has, let's say, throw some numbers. Let's say it's going to go to 500, right? Why instead of, let's say buying some oil stocks, because they're going to boom, and sometimes maybe in the liquidity crisis crunch.
call it whatever you want. Don't worry.
Why?
But let me just say
Why
this
not
real
just
quick,
buy
because
Meta?
why not just buy
Let's say,
Meta? Oh,
no.
no, I just want to say,
Go,
JP, this is the right answer to that, because I know JP's trying to help out someone else trying to find my portfolio. That's the answer. All right, so or Julie Caesar actually just answered it too correctly. It's in those videos, and I have to do an update. I'm just waiting for one brokerage to freaking update one of my holdings, and then I'm going to do the update video. It's because I have multiple brokerages, not all of them update instantaneously, and it's annoying. But I'm actually working with another third party that I'll be able to do updates much quicker, because they reassured me that they work better with that one. But anyways, what your question was, during liquidity crisis crunch, why not just buy Meta?
Why not? Well, not just Meta, right? The position that you had, that they have a big amount of conviction in it, right? Why not buy Meta at 300 and then 250 and then 200 and then?
Oh no, at 300, I thought the company
not?
was not very attractive, if I was being honest.
My question is it did by any chance, I don't know if you can say it, I don't know if you did you sell any at 300 or close to the peak? or you
No,
never sold it? All right, all
no,
right.
I have
So
never.
now,
Mhm.
mhm.
No, I've never to this day
Okay.
sold a single Meta share that I've ever purchased, or Facebook. Back then it was Facebook. No.
Okay. My question now is: so you said at 300 it was overvalued.
Mhm.
Now, is it overvalued current day or overvalued you think where you think it was going to go?
It was
Is the risk?
overvalued from the. Mhm.
No. Continue. I don't want to speak
So
over you.
no, that the answer to that question is actually more so that all evaluation should be on what you think the valuation should be, considering where it's going to go. Nothing can be overvalued today if you're not like that. That statement implies you know that, or you're projecting into the future. You should never. There's no today, like there's no PE ratio that's right, is what I'm trying to say. There is no such thing as a P ratio that's always the correct one. It depends on what the future is. A P ratio of 5 could be overvalued for a company if it's going to contract by 50% per year.
Okay.
So yeah, you know, it's basically, yeah, that's basically it for that. But I, well, yeah, would you have another question regarding that?
No. I'm listening to you right
No, that was just basically it with that.
now. But yeah, man. Another thing. Now let me ask you this, right? How bad do you think? And it's just again, you don't have an actual answer. It's just your thought. Mm, How bad do you think it's gonna hurt people's mind that they're buying very bad stocks nowadays, and that's gonna boom? And let's say if we do get out of this situation that we're in the future, right? Because probably some stocks that are bad are probably gonna boom
Yeah.
just because there's been some contraction, right? How bad do you think that's gonna be for people's mind in the future, thinking that it's, let's say, a Tesla, you get me? That
Yeah.
it was bad for people because people just got their head grew so much on fake
Yeah.
ideas. How bad do you think it's gonna be for people? Because I'll be honest with you, what's going on right now doesn't happen a lot. It does happen. It does happen. I'm not gonna say this is a one in a lifetime event, but it doesn't happen that often, right?
Hmm. Yeah.
How much do you think it's always gonna be? How again? How bad do you think it's gonna actually hurt people in the long term of being right on an incorrect thing?
I mean, speaking on other people's situations, I mean, it's going to be negative. It's not going to be good for them. But I don't. Everyone can only do so much before you have to say, well, it's your responsibility. Um, which is not what you were getting to at all. But I'm just adding that in there because, like, we have to focus on ourselves. Like, at the end of the day, I'm going to be focusing on doing what I think is right for
Mm,
my family or for my future family, my future kids,
mm,
etc. And so I'm going to always be thinking about where to position my assets in a way that can benefit that. And as you should be doing for yourself. And, you were telling me off camera that that's exactly
mm.
what your mission is. And I'm very happy to know that I'm helping you in that journey. Right. Very happy
Thank
to,
you.
but you know, where I mean, if you're trying to help someone to try to realize that, you're just doing that because you're just trying to help them. I mean, you're not really benefiting. You're not benefiting from that person making good decisions because you can make your good decisions all on your own in your own little corner, and then you're just gonna have good decisions, right? You're gonna benefit from those good decisions. You're not really going to be harmed by their bad decision. There are some bad decisions other people can make that can harm you too. But yeah, you know what I mean? Like if we're talking about just strictly within the stock market, yeah, there's nothing that the other person's going to necessarily do that's going to harm you per se. But um, the the um, the other thing is that I think that I talked about this a long time ago in the past, but like more specifically, I'd say that being right for the wrong reasons is almost as bad, if not worse. I think it's actually worse than being
It's
wrong.
wrong.
Yeah, yeah, because it builds up that fake confidence that you shouldn't really have. So it's true, and it can happen. Like for example, Tesla did that for a lot of people. It breeds this fake confidence that you shouldn't really have, and then basically says, "Oh, I'm a genius. I can pick stocks or whatever." And it's not even people. It
Their
people
ego,
should.
their ego gets attached. Their personality gets attached to a stock.
Yeah, and I, I don't know. It's like I want to try. I look at the stock market a little bit. I don't know. It's hard to put. finger on it. And having this conversation with you, I think I'm almost also realizing this myself too, that I want to try to verbalize in some way. I hope it kind of echoes this in the audience can hear this, or even you hear this. I think people think about stocks differently. I don't know that we look at stocks the same, and I'm not saying you and me, I'm saying me, everyone, or like people. You see, it's hard to say. I think that different people look at stocks differently, and depending on where you are in life or like what it is your strategies are, I look at it different. Like for me, I look at it like I don't know if anyone can speak to this and say that's how I look at it too. I look at it as like accumulation of sorts, and I actually look at it as if it's like businesses I am accumulating. I hope to not sell any of them, right? That's what I buy each one with the intention of. And if I do sell any of them, it's for, like, in my opinion, like a big reason, or if it was for an intended purpose in time, like ConocoPhillips served a specific purpose. Google is one that I don't want to sell, or Markel, or just naming off some of them off the top of my head. Those are ones I don't want to sell or divorce from them. I might trim because there's prices obviously that I say, okay, it's ridiculous, and I'll trim, like Amazon, but I don't divorce myself from Amazon. Amazon still is in the portfolio at a much reduced amount, right?
Fabio,
And
no, continue. I do have a question after this.
basically, I'm almost rambling my own mind, so it's better.
No, you're good. You're good. Again, but hey, don't ever take that as it doesn't have value. I think that people here come here for as much value as your ability to teach about stock market and your ability to just throw your own thoughts. Always remember that, right? No, anybody can teach how to value stuff. College can do that. Nobody can say what your own thoughts are. Only you can say that. That's the biggest value you have.
Very spiritual, yeah.
Yeah, a little confidence boost right there. Question for you: if you can disclose this, and if you cannot disclose this, can you please just give a range?
Yeah.
Well, let me rephrase this a little because I don't want to put you out there like that.
Oh, I kind of know what question it is.
How much do you think your education cost? Give us a range for your degrees. For your degrees, right? How much was it worth? Because I do think because I feel like some people are like, oh, I wanna invest $1 million in the stock market, right? And they have that, and it doesn't. Because I'll be honest with you, at the end of the day, that is a cost. You have to earn some income and then spend it in that particular way, right? But people kind of look at it in a different way when it's like, oh, school, you get me? So how much? Just a range, because again, I don't want to put you out there. What's a range of how much somebody should expect to spend on your level of education and your ability?
Are you? And I have a question to your question. Are you asking how much it costs me monetarily, or how much I value it, or both? Like how much it costs me versus
but
both.
I didn't want to say, hey, can you tell me how much money you spent? I don't think that's the correct question.
Oh, no. Yeah, I can say that. I spent actually this much.
Okay.
Yeah, I spent that much.
Well, I mean, wait, out of your own pocket, I understand. No, but like, how much is it actual?
Oh, how much did it cost? Yeah.
No. I'm not saying, hey, how much did you actually spend your money? I'm saying how much did it actually cost?
So I had a choice when I graduated high school. I went to actually a very good high school where it was a school that, it was a high school that specialized in getting kids into really good universities. It was a preparatory school. So preparatory schools, that's what they're basically intended or designed to do. And I had a choice at the very end. I actually was, happy. I got accepted in every university that I applied for. And the two that I'm going to highlight, it's usually my friends at the time were kind of like, oh, you got accepted to that one. Why are you going to this one? Because I think that that's kind of like almost like a falsehood. I had the choice between at the end, stay local or go to UChicago. UChicago was and I actually I had someone on the show from UChicago, University of Chicago. He actually did the last and the only Tesla debate interview with me. So he went to University of Chicago. But by the way, it's not to diss anyone who goes to University of Chicago. Wonderful institution, wonderful that. I have an uncle who lives in Chicago, and I was supposed to actually stay with him if I decided to go there. So I would actually not even pay for housing. I could save money on that front. And that was like the whole plan, right? And then I had another choice. And that was like my dad always said this to me. He's like, son, when you go out throughout life, you're going to enter a lot of whys. And his English is not like the absolute best. So what he basically, for anyone who's a native English speaker, forks in the road, right? Forks in the road. He would say whys. You come up with a lot of whys, but what he meant was fork in the road. So you're basically going to come to life and you're going to have a choice. And that choice is going to dramatically change how your life goes into the future. And so my dad was a guy who he had an education background from a third world country, and he did pretty well, you could say. And he was of that belief that, you know, it's more about what you make of it than anything else. And you got to be really smart and strategic with your decisions. And I think looking back at the time, now I know I made the right decision. Looking back at the story, I definitely made the right decision. Because I don't think I would have had the same exact opportunity to work at where I work now and was able to, you know, get these opportunities. And I focused more on maximizing my education. And what I had at U Chicago was not a full ride scholarship. I did not get a full ride scholarship, but I got a full ride scholarship at the local university, which wasn't the worst university, by the way. And so I would basically go to university with no cost whatsoever. And I could basically try to maximize my time there and use all the resources available, and then try to come out on top, and have also the time to use the local connections I made, because I'm a local. I lived here, so I knew people, and I could, you know, start my tutoring business. I don't know if I would have had that up in Chicago, right? I don't know what would have happened in Chicago, technically speaking. Technically speaking, we would have had to evaluate the two stories side by side. But I'm thinking, like, if I went up there, I probably would have only gone to university, you know, chilled out. I don't know if I would have necessarily, and I would have probably just gone out and worked at a corporate job, and that's probably what I would have stayed, right? So where I went, I think the in-state tuition, if you don't get a full ride, it's not even that expensive. It's like $300 per credit hour, which is not considered that expensive. Or sorry, not 300. It's like 220, which is pretty cheap. So 3 credit hours per class, you're looking at, I don't know, like 600 something. I don't know, somewhere around there. Well, there's going to be other fees tacked on and stuff like that. But all in all, not that expensive a school. And you get a lot of, you get to save money on that front. There's a lot of people who go from out of state and they pay a lot of money. I have no idea why. But from what I understand, up north, it's very expensive to go to school, even in your own state, that it's even cheaper to go out of state in the Florida school. But yeah, I don't know if that kind of answered your question, but now the second part of your question, what was the value of it? Very valuable, very, very, very valuable. But with the caveat, a lot of people go to university, they waste it. Like I've been saying earlier in this call, so many people, I think most people could go, they go to university and they just completely waste their time there. It's like a 4-year vacation, and they get education in something that doesn't have a skill value, period. So, you know.
Let me answer now something, Fabio. Let's say you started college at what age?
I started university at the age of 17.
17. Okay, let me answer something. You're 17 again, right? So you can make the decisions, right? But as soon as you make the decision, all from 17 to now, all that knowledge is gonna get erased, and you don't know what life's gonna be. Okay.
Yeah.
You cannot go to college. There's no way. No college will ever take you. This is the scenario I'm putting you in, right? You cannot go to college. What would you do?
Yeah.
Because I'll be honest with you, right? And I don't want to come out as, because I'll be honest with you, I think that's something important that comes out of YouTube finance. It's hope. I think that's the biggest thing that comes out of YouTube finance. The good people and the not so good people. I think that the good thing about it's hope, right? One kind of teaches you, one kind of, chills and, takes advantage of your hopefulness. It's hope. I think that's the main thing, right? So it's always good for people like me. I started college. I didn't finish, right? That, I always imagine myself, hey, maybe I will do this, maybe I will do that, maybe now I will do this, and this, right? I want to kind of take it the opposite side of it, right? Somebody that is kind of well off, let's be honest, right? And that did make those steps. What would you do in the reverse? What do you think you would have done? Again, you have all this knowledge now, and then as soon as you make that decision, you're gonna go back to 17, and you don't know what life's gonna be. All that knowledge is gonna get erased. So what would you do? You're 17, you cannot go to college for whatever reason. What will you do? Would you get a sales job? What would you
So if I'm being honest, I would try to find a way to, if I can, find a way to maximize my time young, try to get some skills, some money. Okay, question, because this is actually a big thing. Is my family trying to assist me at least in housing? For example, would they let me stay? Because that
Yeah,
actually is another fork in the road.
your family will let you stay. They will not throw you out, right? But you
Yeah.
are not gonna go to any kind of you cannot get a higher level education in the sense of book wise, right? Now let's say
All
you
right.
go to construction, just to give an example, right? You can learn how to be good at your job, right? I'm not taking away that kind of
Mhm.
knowledge. Just you cannot learn anything book wise.
Okay. Do I want to get a specific career path that requires this education? That's another question.
That's on you.
That's
You
up to
choose
me.
whatever you want
Okay,
to do.
so basically trying to get to the same position I'm at today, trying to get
Well,
there from
again,
there.
if you want, like let's say that you want to try something else,
Well,
what would you do?
the one way would be honestly the community college path is one that I would try to go for with because you already gave me a very good advantage that this is something that to be said. Anyone who has kids right now or is planning on having kids, please understand that is the if you can. Obviously, there's some unfortunate situations where you cannot, but one of the greatest advantages a family can provide, and this is something we're both Latin American. It's a completely
Mhm.
different culture. Like for us, it's like almost normal. Like I'm gonna find it completely normal if my son or daughter, stays with me for a very long time, right?
Yeah.
I want them to build as much as they can, and that's the advantage they have. I'm saying, that
Mhm.
mortgage you don't
Mhm.
have, that rent you don't
Yeah.
have,
Yeah.
yeah, save
Yeah.
that,
No
and
offense, if I can
yeah,
interrupt real quick. In fact, where I come from, right?
mhm.
You cannot build houses. Where I'm from Cuba. This is
Yeah, you're
number
from
one.
yeah,
Yeah, you cannot build houses, right? That doesn't exist at all, right? So it's normal. I know. I personally know, right? In fact, wow. Now that I'm reading about it, I know a family of four generations living in one house,
that's crazy.
and I'm saying from birth to when every single one had a child, every single generation had a child, was all in one house. I
Yeah,
know that.
that's to give all the Americans perspective of some
Yeah.
place like Cuba. Yeah, that's
That's
terrible. Yeah,
that's not something normal at all here. Again, let's say your parents, they're older, they want to live with you. All right, that's a different scenario. No, I'm saying, this girl have a kid. All right, girl ends up with somebody else, has a kid. All right, like that, all under one house, from the beginning when they
yeah,
were born to when they give birth again. All that
exactly.
happens in
Yeah.
one house. It's yeah,
No, but all in
pretty
all, I
scary.
think like that's something that I understand that like American culture is very different, but American culture, it's like kind
Hmm.
of you're 18, you leave. You leave at 18, and then a lot of the kids who go to college, they stay at the room and board. Maybe it's not even covered. They take on extra debt, all this, and versus in Latin American culture at least, and I'm speaking for you and me, are
Hmm.
we're encouraged and to a huge degree that family kind of helps each other out in a big way, and what I think that might be an additional thing that I think all parents should kind of do. We're getting to like some meta. I mean, I don't have kids yet, so I don't want to sound like, with a, stick up my ass, like, haha, I'm such a good parent. I'm not a parent yet, but it's something that I think is almost like my instinct to do, and what I already think I'm planning on doing is, give them that opportunity, but with the understanding that they have to learn. They have to understand you have this advantage, take advantage of it, right? Go out, produce wealth, save it. Yeah, you have this advantage. So when your scenario that you gave me, you just gave me a massive advantage. And I just want to highlight that in your fourth scenario,
No, no.
I have housing pretty much covered, which is one of the biggest expenses. So now you've given me the opportunity that I can work somewhere and I can reasonably save enough money to then afford community college expenses, and then get my way into
Well,
because you gave.
hold up,
Mhm.
hold up. No college. It doesn't matter how
Oh,
much
you're
money you
not
have.
letting me go to
There is, there
college.
is, there is in college. There is in college.
Okay,
Again, you can only learn from what. Again,
I mean, there. If that was the case, then I would have to, like, if I cannot, nothing's stopping me if I'm that dedicated to going out and acquiring the literature from either, there's the Internet Archive online, which actually has a lot of stuff. I know, by the way, for the audience, I know we lost him and his internet came on, but I'm just going to continue answering his question because it's just as much for you guys as it is for him. But there's as soon as you reconnect, I'll maybe repeat this if you need me to, but there's the Internet Archive, which is a good place for you to look up for books. I can hear you now. The Internet Archive is a good place to look up for books, or you can go and buy it on Amazon if you want a hard copy of it. Like, there's so many different really ways. Your local libraries can be a really good source. And this is if you're like really determined to find out that academic knowledge, right? You're really determined to read that book, really determined to read those college books. You can do it. There's nothing stopping you. You're not going to get your degree, right? You're not going to get the paper that says you know it, but nothing can technically stop you from learning it. Really, you won't get the added benefit of someone explaining it to you, because there's a difference between someone you reading it and you reading it, then someone explaining it to you. That's what you're going to be missing, which, if I'm being honest, cannot necessarily be replaced. It's not something that can be easily replaced. Videos can do an okay job at doing it, but the thing is, nothing will replace one-on-one ever. One-on-one will never be replaced. And that's something that I also kind of noticed with, for example, in my tutoring business. Technically speaking, all of my students throughout the years, all of them, they could have gone online and, learned that information somewhere. You can learn calculus online. Nothing is stopping you. But all of them, one by one, all of them had individual aspects that they needed to kind of hone out. They needed customizable questions. They needed someone to be right then and there and say, well, this is actually what you're missing. This is the part that you need to understand. That video online doesn't have every single type of problem available to you. It can't just like explain it verbally, break it down, repeat it over and over and over again, give you a different version of the question over and over and over again, and walk you through it over and over and over again. This is something that individualized tutoring, that's why I even had demand for my services in the first place when I was younger, right? It was for that reason, because those students needed that extra push, right? They needed that one-on-one. That's not something that can necessarily be replaced yet. So it makes it harder, but not impossible, because I, in a lot of instances, I didn't seek out tutoring for any of my classes. I would just study harder. But some people can do that. Some people have a harder time. It just depends.
Yeah, visual learner, hands-on, different kinds.
Correct.
Fabio, it's pretty much up. I'm pretty much all good on my end. I don't know if maybe you want to take some questions. I don't know what we have to do.
I don't know if there weren't really any exact questions dedicated to the conversation that I could see. I see that there were some comments here and there about what we were talking about, but yeah, like I saw some financial advice questions, but I can't answer those. So yeah, pretty much if that's all your remaining questions, then I think we can just close it off here.
All right. Well, hey, Fabio, appreciate the opportunity. Thank you for everything.
Hey, no worries. Anytime.
Thank you for providing good value, and the most important thing, hope. And for providing hope for people. I think that's the most important thing.
Oh, no worries, man. Anytime. So guys, I'm going to end the broadcast here. Thank you guys so much for watching, and I'll see you guys on the next one.